And it's
Do you want to make me host right now? I won't start sharing now, but at least then you don't have to do it later.
Not yet, not yet.
Oh, okay, you'll do it later. Okay.
Yeah, once we're already live on Facebook.
Okay, dear, let's go.
They will just ask me to type what the topic is. Give me a sec, it's still loading the Facebook interface.
Okay.
Okay. Click on go live. Okay, there should be a little live button that shows on our Zoom. Yeah, looks like we're live. Hey everyone, Letitia here, coming to you this Thursday afternoon, December 3rd, for another edition of my weekly Money Matters webinars. And as announced a little earlier today, today's topic can be perhaps a sensitive one for people. We're going to be addressing the issue of dealing with consumer debt, and we're going to explain what consumer debt even is. But again, at one time or another, many Canadians may find themselves in a situation where their debt load becomes unmanageable and they are feeling stressed. They are wondering if this would be maybe the right time to call and speak to somebody. But because it's such a sensitive topic for people, many people may be delaying the inevitable. And on today's webinar, I'd like to maybe as much as possible destigmatize this whole conversation and bring some openness and some compassion to the conversation. And I am very glad to be joined today by the lovely Taz Rajan. Taz is the community engagement specialist for Bromwich+Smith. Bromwich+Smith happens to be one of the leading firms helping Canadians with handling debt. And Taz can tell us quite a bit more about that. I'd like to read just a quick introduction to our guest today, and I will invite you all to stay tuned and listen in if this is something that you may find valuable, either for yourselves or perhaps for a family member or a friend that you think could benefit from learning about these options. So Taz, give me one moment guys, to bring up Taz's bio.
All good, thank you.
Okay. Yeah, and thank you, Taz, for joining us, by the way.
Pleasure.
Okay, you sent it to me and I had it open. Give me 1 second. Okay, I have it. Okay. Okay, all right. So Taz Rajan, everyone, has been in the finance industry for 18 years and has her adult educator certificate. Taz is passionate about simplifying complex financial concepts for Canadians, exactly what we're about on this Money Matters series, and about getting tough conversations started in order to find the right solutions to move on and up. Taz is the community engagement partner at Bromwich+Smith, licensed insolvency trustees, and has been featured on Global TV, AM 770, and on the Erin Sky Kelly Achievement Club webinars. In her spare time, you can find Taz facilitating personal development workshops, hiking in Canmore. Oh my goodness, you're based out of Canmore. Practicing hot yoga, volunteering, networking, and reading. So thanks again, Taz, so much for joining us. Welcome to the show.
Thank you so much for having me. And no, I don't live in Canmore, but I love to go hiking in Canmore, but I only do really easy hikes, okay?
I've not been to that part of BC, but I hear it's absolutely beautiful. So Taz, I know when we chatted informally earlier, I sent you a list of questions and I know you prepared some answers, because when I was thinking about this topic and there were certain questions that came to mind, you know, as somebody who's not really familiar with the options, as many people may not be, absolutely, I will, yeah, sorry. So I know you prepared a few slides for us, and I will also go ahead and ask you those questions that I had prepared and that I know that you were kind enough to prepare some answers to. So how do I, okay, I'm gonna make you the host so you can share your screen with us. Thanks so much.
Thank you, Leticia. Yeah, and I'm glad that you're, as you said earlier, there's so much stigma around this, but it's so wonderful that you've decided to, talk about this with your audience, just so we can, I love what you said earlier, let's try and see if we can destigmatize this, because it's very real and it is something, that many of us may face, or we may know somebody who's facing this. So it's just great to have those tools. And I think it's great that you put on a show like this to just help regular, everyday Canadians just have some of those tools in their tool belt. So again, thanks for having me.
Thank you. My pleasure, Taz. So do you want to start by telling us a little bit about your firm? I mean, I literally didn't know much about. I was looking for somebody that I could bring in, and it just so happened I saw an ad on Instagram for your company. I was like, oh, perfect. Let me reach out to these guys. So they were nice enough to put me in touch with you. But to be honest, I didn't know much about your company. Perhaps you could tell us a little bit?
Sure. Thank you so much. So at Bromwich+Smith, we are more than just licensed insolvency trustees. We help people through some of the toughest, most emotional, challenging points in their lives. We give clients the advice, attention, and the confidence to really rebuild their worth piece by piece and look forward to a brighter future and financial wellness.
Well, I really like that. Thanks, Taz. And I know we're going to be getting into a little bit more in depth as to how you guys can help Canadians and what's entailed. The other question I had for you is, at one time or another, many people find themselves contemplating how to deal with consumer debt. And then I was going to ask, maybe you could tell us how your firm can help people. And before you answer that question, I wanted to just clarify, when we speak about consumer debt, we are referring to unsecured credit cards, unsecured lines of credit. We are not talking about your mortgage on your home or other properties. That's considered secured debt. Here we're talking about when somebody is perhaps overwhelmed with the amount of consumer debt, credit card debt that they've taken on. Do I have that right, Taz? Is that mostly what we're speaking about here?
Yeah, absolutely. We're talking about, unsecured, so things like credit cards, unsecured lines of credit. It could be potentially student loans. It could be CRA debt. So these are the kinds of things that we're talking about. Yeah, absolutely.
Very interesting. So I'm glad you even mentioned those last two, because that wasn't even on my radar. And I'm curious about what the options are, because we all know, students, with tuition the way it is, student loans can be with somebody for a very long time. I know people in their 30s who are still paying off student loans that they took out in their early 20s, which I know is crazy, but I mean, I've seen it enough times, even with friends of mine. So yeah, tell us a little bit about, how your firm can actually help people. Like
Absolutely. So in Canada, we have federally legislated debt forgiveness, which is only administered by licensed insolvency trustees, or sometimes for short, we call them LITs. And there are two options. It's consumer proposal and bankruptcy. So with a free, no obligation and totally personalized phone call, Bromwich+Smith helps Canadians really figure out, the first thing you want to do is figure out where you're at right now. What are your options and what are the consequences of each of these options, and really give you that professional advice on how best to move forward. So if a consumer proposal or bankruptcy is not right for the Canadians that we're talking to, we will refer them to a trusted professional. So maybe we're referring them to a mortgage broker to refinance their mortgage. Maybe we're going to refer them to a debt repayment program. It really depends on that situation.
Okay.
If a consumer proposal or bankruptcy is in fact best, we will advise the client as such and help them sign into the right program, work with them through their counseling sessions to rebuild their worth, and all from the safety and comfort of their home. Sorry, give me just one quick second here. I'm so sorry.
Yeah, no worries. You are at the office. Some people are still going to an actual office, guys. Give me 1 second.
I am so sorry about that.
No problem at all.
All right.
Got it. And so yeah, I mentioned to you that, when I thought about this topic, and first of all, the reason I thought about this topic is we all know that currently Canadians, Americans as well, the economy is going through some challenging times. There's been job losses, people maybe having to change work or shift. We're definitely at the economic level, we're going through some challenging times. So my question is, first of all, this is a topic that's, again, a sensitive topic. People are even embarrassed to talk about it. I was wondering if you have any statistics regarding maybe the number of Canadians who at one time or another make use of these measures, of these options.
Yeah, so, really interesting. In September, Bromwich+Smith actually conducted a survey that revealed that 66% of Canadians feel that debt or insolvency hold a great deal of stigma. So it's very much like what you're talking about, that it is a sensitive subject, something that people are feeling stigma and shame around. It went on to reveal that 26% felt that people that do not pay their debts are lazy. 53% feel they're irresponsible, and 34% feel that Canadians that are not paying back their debt are selfish. And these are really dangerous misconceptions about Canadians who are struggling with debt, when in fact we know that it's truly external triggers, life events that puts people behind on their bills. Nobody wakes up in the morning going, I'm just not going to pay my bills anymore, right? It's
right.
Like what you talked about, job loss, it could be divorce, could be disability of yourself, your spouse, your children, it could be a critical illness. So these are some of the pandemic. I mean, nobody, in 2018 thought that we were going to have a pandemic, right?
No, yeah.
So it's quite staggering, and these are dangerous misconceptions. In the last quarter, so in Q3 of 2020, just over 20,000 Canadians filed into a personal consumer proposal or bankruptcy. The same quarter last year, 2019, just under 35,000 did the same.
So I actually find that fascinating that we had a higher number in 2019 versus 2020. I would have thought that this year it would have probably been, a lot higher. Isn't that a little bit surprising, Taz? What would you say about that?
Yeah, it's so interesting because when I tell people that I work for a licensed insolvency trustee firm, they're like, oh, you guys must be swamped. And the truth is, the Canadian government really stepped up with various programs, and we're familiar with, CERB and the other programs, and lenders were offering deferrals. So Canadians were able to hang on, many just barely holding on, let's be honest, right?
Yeah.
That's, of course, it's changed. We don't have CERB, it's changed over. Lenders are not necessarily still offering deferrals or, not going to the collections and other options that they have. So yeah, like you said, there's still a lot of shame and stigma attached to discussing our financial troubles. So it can be challenging for Canadians to reach out for help. But I just want to say, and I think, Winnie the Pooh said it best, one of the bravest things we can do is reach out for help. So it's really important to know, who do you reach out to for help?
Absolutely.
And I would say to your listeners, pick up the phone and at least just have the conversation. Don't wait until it's too late to do something. Let's take control back by taking action. Yeah. And just because you make the phone call doesn't mean you have to sign into anything. It just means you're going to get the facts, you're going to have some options. Now you can think it over and make a really informed decision rather than being in this panic mode of, now I have no choice.
Or continuing to, as you said, perhaps like hang on and yet kind of in a perpetual loop, right? And I know you've touched on it earlier, but you have addressed, you've mentioned the term trustee in bankruptcy, and I've always wondered what that term even refers to. Why is it even called a trustee? Pardon my ignorance, but I figured, I may not be the only one who has this question. Would you mind even telling our audience, like, what does that term even refer to?
Yeah, and no need to say pardon me for my ignorance. This is a really good question. We should be asking these questions. So yes, I'm happy to share that with you.
Thank you.
A licensed insolvency trustee, or an LIT, are federally regulated professionals who provide advice and services to individuals and businesses with debt problems. So LITs help people make informed choices to deal with their financial difficulties. LITs are the only professionals who are authorized to administer government regulated insolvency proceedings. that allow a person to be discharged from their debt, to really have their debt forgiven. And those, again, we talked about consumer proposal and bankruptcy, right?
Got it.
So for individuals who are in significant financial difficulty, these options might really be the best solution. And once a proposal or personal bankruptcy is filed, the really great thing is collection action or any legal action that your creditor might be able to have taken before, they cannot proceed with that anymore. They cannot initiate collection or legal proceedings against the Canadian who, signs into one of these programs. And the other really important thing to know, I think this is really valuable from a just to protect yourself and be in the know and have that confidence, is that LITs, licensed insolvency trustees, are subject to ongoing oversight by the Office of the Superintendent of Bankruptcy, and they must adhere to federal standards of practice and a code of ethics for trustees. So this is really important to know. There's a lot of different people out there that market themselves as being able to, help out with your credit, with your debt, that kind of thing.
Yeah.
But, it's just like, I remember when I was a mortgage broker, we would always say, make sure you're looking for a licensed mortgage broker, a licensed professional. And you as well, like in your industry, there's certain accreditations we're looking for. So I want to give Canadians that, vote of confidence that a licensed insolvency trustee, there is legislation, there's a code of ethics, there's oversight on a licensed insolvency trustee.
Thank you so much, Taz. Like I really, you've answered my question perfectly, and I'm glad to know that, in other words, the professionals that work in this industry are highly regulated. They are the only ones authorized to help somebody through these proceedings. So you want to be dealing with a professional, with a licensed professional.
Exactly.
And then I'm sure you guys have things like the privacy of your clients, because of course, especially with something as sensitive as something like this may be, clients are going to want to know that there are strong privacy policies in place, and I'm sure you can attest to that, correct?
Yeah, absolutely.
Yeah, thanks, Taz. So I guess the other logical question would be, when do you think would be appropriate for someone to even consider one of these options?
Yeah, that's a really, really great question. I think that's one that we sometimes will struggle to really figure out, when do I reach out for help? When do I need to look at this? So I like to talk about, basically 5 signs that your debt is overwhelming you. And those 5 signs are, when you're unable to make your minimum payment on or before the due date. That's a sign. Okay. If you are using credit to pay off credit, so if you're doing consolidation loan, payday loan, these kinds of things, you're borrowing to pay off borrowed money. That should be a warning sign.
Right.
The third one is if you're starting to borrow from friends and family, that's probably a warning sign, right? Because it shows that you're not able to handle your own debt on your own. It's becoming overwhelming. The fourth one is if you're starting to consider high interest loans, like those payday loans or those loans that pop up at 2 a.m. when you're on the internet all by yourself and not having to talk to a human being, that should definitely be a warning sign. And then the last one is when it starts to affect your work, your relationships, and your mental health. And again, we've done studies. There's been studies that show that financial strain can come through in like migraines, stomach ulcers, anxiety, depression, these kinds of things. So that is definitely a huge warning sign that it's time to reach out for some help.
Wow, thank you for pointing that out. Like I never even thought of that, but I guess that's what happens when people are not actively dealing with their problems, but they're internalizing all that stress. It has to come out somewhere, right?
Absolutely.
I was going to ask you, right, with regards to, because you mentioned the term consolidation loan, and that seems like it's a different option versus what you guys offer. Now, is that something, I'm taking it that's a step below this. Like this would be, because I believe banks, like traditional lenders, offer these consolidation loans, right?
Yep.
So if a client maybe reaches out to you because they don't know any other options, would you, but in speaking to them, you realize, you know what, you're not a candidate yet for either a consumer proposal and a bankruptcy, and we're going to distinguish between those two, and we're going to get into the details of those. Would you suggest to them, you know, maybe you should consider a consolidation loan?
That is a very, very personal conversation. It really depends on the individual. What I can speak to is the difference between a consolidation loan, let's say, and a consumer proposal or bankruptcy. So, you know,
Yeah.
in a consolidation loan, it's exactly what the word is saying. You're consolidating. So that's like you're taking 4 or 5 different things and now you're grouping them into one thing. So you might be taking 3 or 4, you know, 3 credit cards, a line of credit, you know, all these separate things that you're making separate payments on that all have a separate interest rate. You're lumping them together into one loan with one interest rate and one payment. So that's what a consolidation loan actually is. And just like other things, not all consolidation loans are equal. So it's really, really important, if that is the step you're going to take, I would say have the conversation with us first to see if, you know, it makes sense to go that route.
Sure.
And if you go that route, you really want to make sure that you're getting a much lower interest rate than you were with the 4 or 5.
Of course.
Right?
Yeah.
Not just you want to look at the interest rate and the APR, the annual percentage rate. You really want to look at these sorts of things because the idea of
I'm sorry, annual percentage rate. You see, like you
so
already lost me there.
sometimes the sticker rate, they'll say, oh, it's 8%.
Yeah.
And then in the fine print, the annual percentage rate, when they kind of work that out annually, it's like 34%.
Oh,
so
yeah.
you need to read,
because it's actually like 5% per month or something. It's not annual. Yeah,
that's right.
Yeah, I've seen.
So we need to look at the APR, the annual percentage rate.
Wow.
And the whole point of looking at a consolidation loan or any of these options is to move you further ahead, to get you out of debt. So if it's a higher interest rate and it's a payment amount that you are not realistically going to be able to keep, it's not moving you ahead. So just important to go in eyes wide open. If you are looking at a consolidation loan, that might actually be the best option for you. These are just some of the things I want you to watch for if you go that route.
Yeah, no, I'm glad you mentioned that, Taz, because I can think of, you know, at least a family that I was speaking to where they went to, I don't want to name the company because it may sound bad, but there are some lenders out there they're not quite payday loan lenders. Gosh, I'd like to name the company, but I don't want to at the same time.
No, let's not defame anybody.
No, because I mean, they serve a role, and if somebody's really in that sort of desperate situation, they're looking for a quick solution. That may be, but when I looked at the actual rate of the loan they were paying, it was coming to, is this even possible? 46% per annum? Is that even possible in Canada?
Yes.
So essentially, I think these particular clients, they were having a hard time covering the minimum payments on the credit cards. So they went to this third-party lender to help with that. But it's like, my gosh, you're just digging yourself into a deeper hole. Like I actually come.
That's why I've put that as one of the warning signs. If you are borrowing money to pay off borrowed money, that should be a warning sign. Now, let's say you know what, you've got $3,000-$4,000 and you're looking, you know, this is 18%, this is 21%, this is 15%. And hey, my bank is offering me a consolidation loan at like 3%. Okay, maybe it's not a big deal. Maybe that makes sense. Look at the APR, right? But it's when you're already struggling to make these minimum payments and now you're going to go do this other loan and you're going to struggle to make those payments. Maybe that's not the wisest thing. We're sort of maybe pushing off something and actually making it worse over that time. You know, you're trying to refrain from a consumer proposal or bankruptcy, but you're making the pain longer and harder.
Yeah.
Really.
Yeah. That exactly, like you literally just delaying the inevitable at that point, because I mean, unless it really is just a short-term bad patch that you found yourself in, and maybe you just got a much better job all of a sudden or what have you. I guess the other question I had, but again, if somebody's already, let's say, maxed out on their credit cards, what are the chances of them even being able to qualify for a consolidation loan? Because I know, for example, if you go to one of the traditional lenders to even apply for a line of credit, they expect you to have decent credit, like 700 plus at least. So
I'm going to say it's just like insurance. When you need insurance, usually it's a little tougher to qualify.
Of course.
When you need
Yeah.
credit, it's usually tougher to qualify. So to me, a consolidation loan is something that you do as part of your overall financial strategy, not because you're already having a hard time paying off your debt. You're just going, hey, this option is smarter than this option. I can pay it at 18%, but why would I pay it at 18% when I can pay it at 3%? Where you're in a comfortable position and you're just figuring out a way, I could just move a little bit further, a little bit faster. That's a good time for a consolidation loan. I don't really feel that a consolidation loan is the greatest option when you're already struggling to make the minimum payment here.
Yeah. If somebody's already behind the 8 ball, so to speak, this is not the time to be applying for a consolidation loan. This is something that maybe you should have thought about as a debt management strategy, even prior to getting to that point. But I mean, the question is, how many people even have the foresight or the know-how, right? Because again, we're not taught these things in school. And
no,
it's
not unless you're a multimillionaire or you're in the financial industry, right?
Exactly. Like it really, I think just there's a lot of ignorance, and I think some of it might be by design, because let's face it, credit card companies make a lot of money off consumers that, I don't want to badmouth anybody, but let's just leave that. So you know what? So I guess my next logical question would be, you've mentioned a couple of processes. You've mentioned bankruptcy and consumer proposal. Most of us have some vague idea as to what's entailed with these things, but honestly, I don't even know how the process looks. So if somebody, let's say, and so I guess my question would be, what's the difference between the two processes, and when, in your experience, would be appropriate for a person to consider one versus the other?
Absolutely. Really, really great question. So let me just quickly talk about the difference between a bankruptcy and a consumer proposal. And I thought I like this slide because it just puts them right next to each other, right?
Yeah.
So, in a bankruptcy, you may be required to make payments to your trustee for distribution to your creditors and provide monthly proof of your household income and expenses. Okay, so that would be part of the responsibilities of you when you're filing a bankruptcy. Okay. On the consumer proposal side, you agree to pay a fixed amount of money over a specific period of time for a full settlement of your debt. Again, on the bankruptcy side, you're going to have to, it is mandated that you would come to 2 mandatory counseling meetings. Same with on the consumer side. And these counseling meetings, first of all, you can invite your spouse or other family members if you would like to. They don't have to come, but you can. And it's not like the Freudian counseling sessions, okay, where you're on a couch.
It's not the judgment. It's not like this is the day of reckoning.
Yes. I mean, I wish they would have a different term. These are conversations. These are money conversations. It's really, the idea is to give you tools. One of the fundamental principles of the Insolvency Act is rehabilitation of the creditor, of the debtor, and faith in the system. So we have a system of consumerism. We have a system, that is credit based. And so these counseling sessions, these conversations are to talk about budgeting, consumerism, using credit. How do we use credit well? Like they're such great tools. Okay. So I don't want you to get that impression of like a judge or like, a Freud sitting there and you're on your sofa and they're saying, tell me about your mother. It's not one of those, I promise.
I get it. You know what? I'm actually thinking, based on what you shared, like these sessions would have been great before you got into this trouble. Wouldn't it be great if more people had access to this sort of basic financial education? And how do you manage that so that you don't end up in a situation that is, potentially unmanageable or really hard to manage? So it seems to me, just looking at the 2 slides, that with the consumer proposal, it's less requirements, because here it says with the bankruptcy, you have to keep track of your income and expenses. And who would that be reported to? The insolvency trustee?
That's right, to your licensed insolvency trustee. Exactly.
That need to be reported like once a month.
Well, it is monthly. You don't necessarily have to, it depends on the trustee firm. You don't necessarily have to send it in every month, but you are required to track it every single month for, in a first-time bankruptcy, it's a 9-month period. So
Okay.
first-time bankruptcy, no surplus income over that 9 months. And again, it's a really good tool that's basically a budget. That's what a budget is. It tells you how much money is coming in, how much money is going out. So it builds this really good habit that you can use well after you are through this process. So yes, you're tracking your income and expenses, you're coming to the 2 counseling sessions, you're making sure that your taxes are up to date, you're making sure that you're providing your trustee with any documentation that is required. And then in most cases, you would be discharged from your bankruptcy 9 months after filing. Again, if it's a first-time bankruptcy and there is no what we call surplus income, which is a calculation that's done through the Office of the Superintendent of Bankruptcy. So on the consumer proposal side, it can take up to 5 years. It really depends on you, how much debt you have, what your budget, your repayment ability is. The nice thing with a consumer proposal, you can pay it off early if you would like to. So let's say at the time of filing the proposal, it was the pandemic, you were out of work, and then, 2 years in, hey, you're working, money is decent, you have more than enough money, and you say, hey, you know what? I'd like to pay this off a little bit quicker. You have that option, which is really nice. And the thing with a consumer proposal, though, if you do miss the repayments, the consumer proposal is annulled and you would be forced into bankruptcy. Now, there's a little bit of a caveat on that right now, just given the pandemic. The Office of the Superintendent of Bankruptcy is sensitive to that. So I would say have this conversation, but it's so important when you're signing into one of these programs that you're so completely honest and transparent. Don't try to be the hero. Oh yeah, I can afford $800 a month, when in reality, you can afford $500 a month. Then let's, just be really real. And there's calculations that we do to figure that all out as well. And then when all your requirements are fulfilled in your consumer proposal, you would get a compliance certificate, basically, that you have completed your program. So first-time bankruptcy, 9 months, consumer proposal can be up to 5 years. The other little differences that we want to talk about in these two is during your consumer proposal, you can start rebuilding credit while you're still in it. With a bankruptcy, you've got to wait until you're discharged before you can start to rebuild credit. And then there's also a...
Sorry for interrupting, because even this term discharged, again,
Yes.
we've all heard it, but I don't know exactly what it means. So does the discharge happen after the 9 months, or when does it happen?
After the 9 months, if you have completed all of your obligations as the individual. So as long as you've submitted your income and expense forms, you've made sure that your taxes are up to date, all of those things, you've attended your mandatory counseling sessions, then the wording is just a little different. In a bankruptcy, it's called a discharge, which means you've completed everything and you are now discharged of the bankruptcy. Whereas in a consumer proposal, it's just called a completion certificate. So just slightly different terms.
Okay. They both feel like some sort of relief.
Yeah. Listen, I will tell you something like 77% of our clients, when we talk to them immediately after signing, will tell us that they literally feel a weight lifted off their shoulders and they feel that sense of relief. So you actually don't have to wait until your discharge or your completion. People start to feel that relief much sooner than that.
I can imagine that. So just to get clear, in a bankruptcy, do they just erase all your debt, all of it, or are there certain things that don't get erased? Because I had always learned that things like taxes and student loans could not be included. So again, that may just be my lack of knowledge. And with a consumer proposal, my understanding is that some of the debt remains, but what I'd like to get some clarity on is, for example, like what percentage of it might remain. Would you mind just clarifying that?
Yeah, so it's not really about the percentage, but there are certain things that are exempt from a bankruptcy or a consumer proposal, and most of them have to do with like legal things. Okay, so if you have alimony, child support, if you have a court mandated payment of some sort, if there was fraudulent activity, if you had, acquired property through fraud, these kinds of things will not just be washed away or erased just because of a bankruptcy or a consumer proposal. So it's really important to look at that. Now, you raised a really good question though about taxes, because we've always been taught taxes and death are the only, for sure things, right?
Yep.
So, Canada Revenue Agency, they do have options to work with people, to pay off their CRA debt over time.
For sure.
But the only way to have your CRA debt forgiven is through either a consumer proposal or bankruptcy. So yes, your CRA debt actually can be included, again, as long as you actually are insolvent. Insolvent means that you are not able in your regular course, of life to pay off all of your debt as it becomes due, or that you don't have enough assets to cover your liability. So first of all, we're going to have a conversation to find out, are you even insolvent? And if you are insolvent, which makes more sense, consumer proposal or bankruptcy? And if you are insolvent and you're doing one of these two programs, then your CRA debt can in fact be included. But anything that's like court mandated, like I said, alimony, child support, these things are totally exempt from your consumer proposal or your bankruptcy.
Very, very interesting. Yeah, I had no idea. What about, and sorry for asking, but what about student loans? Are they, what's the status on those? Because I mean,
so I don't have a straight answer for you for student loans. Okay. Typically, student loans, if you have not been a student in the last 7 years, typically your student loan can be included. However, I'm going to really, really cover my butt here and say, please have this conversation with a debt relief specialist to figure out whether or not your student loan can be included. Now, if it cannot be included, the nice thing is we can just freeze your payments and your interest on your student loan so that once you complete your program, once you're discharged from your bankruptcy, or once you have your completion from your consumer proposal, then you can worry about doing your repayment on your student loan. So there's going to be reprieve from your student loan either way. It's just a matter of whether it will actually be included in the proposal or bankruptcy or not. So this is something you want to have a very individual conversation on.
Got it. And because I realized that, I mean, there are different types of student loans out there. Some of them were provided in the past by an actual, like by a private lender, like a bank, and some were, I guess,
by the government.
Exactly. So there's different types of student loans, and so I would encourage people, if that is a concern, if that's part of their main concern, they should talk to you guys. So you've already outlined some of the differences between the two processes, and I know you have here, I guess, because obviously the reason many people may not even want to pursue these options, because we've all heard your credit will get destroyed, don't do it, you're gonna ruin your credit. So can you tell us a little bit about, impact on credit for both processes?
Yeah, absolutely. And so that's the screen I've put up here is courtesy of Richard Moxley, and he's written a really great book called The Credit Game. I highly recommend it. But I love this way that he's put it forward for us. Just it's really simple to see, and I think it's visually pleasing. So, a consumer proposal is going to show on your credit report as an R7. Now, if you're not familiar with credit report and how they report, let me clarify that for you. Okay. So each credit product that you have will either have a rating it'll have a rating from 1 to 9, and it'll either be an I or an R. I means that it's an installment loan. So it's a fixed loan with fixed payments, whereas R means it's revolving credit. That means you have a $10,000 credit limit. You can use the whole 10,000. You can pay it off. You can use the whole 10,000. So it's revolving, right? Every time you pay it off, it's available to you. Okay. 1 being the best, 9 being the worst. Okay. So a consumer proposal.
A higher number doesn't mean you're better. Okay.
No, in this case.
Not in this case. Okay. Yeah.
In this case, you want to be number 1. Okay. So a consumer proposal will show on your credit report as an R7. So that's getting pretty close to the worst.
Okay.
And it will remain on your credit report for 3 years after you complete your consumer proposal to a maximum of 7 years. So if the proposal takes you 4 years, it's going to remain for 3 years after that, total of 7 years.
Okay.
Okay.
Yeah.
The bankruptcy, always, like we say, it's the last resort because it's going to show up as an R9.
Okay.
It's going to remain on your credit report for 6 years after your discharge. So if it's a first-time bankruptcy, 9 months, then you're going to be discharged. Then it stays on the credit report for another 6 years. So 6 years plus 9 months, it's about 7 years. And this was something, in the past, I come from the finance industry, and just always in my head, it was bankruptcy is going to ruin your credit for 7 years. And there were other programs that we would refer clients to because, we would say it's only 3 years. What you have to look at is it stays on for 3 years after you complete the program. So you have to add in the time of the program, which is 4 or 5 years, whether it's with consumer proposal or some of the other options. They're going to be 4 or 5 years, plus it's going to remain on your credit report for 3 years after. So it's kind of a little bit of a wash, whichever way.
Yeah. Interesting. Thanks for sharing that. So I guess my question would be, because it seems to me that in terms of the impact on credit, okay, the consumer proposal, you could still apply for credit potentially while you're still paying off the proposal.
Yes.
With a credit card, at least during the first 9 months, no access to credit whatsoever.
That's right.
But I guess, you know what, we actually had one of my mortgage broker specialists, on the call a few months ago and talking about alternative lending. So mortgage lenders that are more, what's the word, amenable, more friendly to people who may not have the best credit. And you know what, like he's shared that he has lenders that he's worked with that even within 2 years of a bankruptcy can help clients secure a mortgage. So,
you can qualify for best rates and best terms 2 years after your bankruptcy or consumer proposal, as long as Richard Moxley, again, in his book, really talks about how do you rebuild that credit the right way. Because when people are concerned about ruining their credit, what they're actually concerned about is down the road, when I want to buy a home or a car,
absolutely,
or, do something else, maybe take out a loan for my business, will I be able to qualify not just for that credit, but at the best rates and terms? And yes, within 2 years from when you've done your whatever program you take, as long as you've taken the steps to rebuild your credit from 2 years after that, you're able to get best rates and terms. It's amazing.
That is so that's the book, The Credit Game by Richard Moxley. Maybe I'll put that in the comments at the end of the video. I really think it would be great for many people to have access to, because again, this whole credit system is such a mystery to most Canadians, and yet it's one of the things that has the most impact on your financial life, and as a result, potentially on the rest of your life, because mismanagement of credit can result in your cost of living being significantly higher, because now you're being charged much higher rates. No, thanks so much for recommending that book. I'm trying to think if there were other questions. Yeah, so I understand regarding the impact on credit. Thank you for sharing that. I guess in terms of this is just my personal curiosity, in terms of the consumer proposal, is there sort of a certain percentage of the overall debt load that is typical or that lenders would accept for a proposal?
No, it can be anywhere from, you could be paying back 10 cents on the dollar. You could be paying back the whole dollar. There is a formula from the Office of the Superintendent of Bankruptcy. So it really depends on each individual. What is their income? How many dependents do we have? What are all the liabilities? What are the assets? These are all of the things that are going to come into play to figure out what your payment is going to be and what percentage. So that's actually, one of the myths that's out there, that, every consumer proposal, you're paying 30 cents on the dollar, or you're only paying, 40% of your debts back. And that's not actually true. It's based on that individual. And that's why you want to have that conversation. There is a calculation to help us figure that out. It's interesting because the word says proposal, and maybe our mind kind of goes towards like a marriage proposal where you get down on one knee and hope she says yes.
No, my mind didn't go there, but okay, maybe.
Well, just so you know, it is called proposal, but it's really, it's a forced settlement on your creditors. So we're sending in this proposal saying, listen, if this person goes bankrupt, you're getting this.
Zero.
So instead, we're going to propose we go with this, and you're not sort of waiting for, will they say yes? I hope they say yes. I mean, right? It's a forced settlement on your creditors. So that's a big one.
Very interesting. We've already spoken about how your credit is impacted. So I guess my other question was, and you've explained to us that, for example, while a person is undergoing the bankruptcy process, they wouldn't be able to apply for new credit cards. I guess my question is, would they be able to keep any of their existing credit cards if they're going through bankruptcy or even a consumer proposal?
So in most cases, typically all of your credit would be surrendered. Again, depends on the person. We'd have to, on a consumer proposal side, you may be able to keep something. The big one, contrary to most popular belief, people think, I know, in the past when I worked at the bank, you would commonly hear people say, well, don't do that. You're going to lose your house. You're going to lose your car. You're going to lose everything, right?
Right. Yeah.
And contrary to popular belief, again, what are the 4 key principles of the act? It's rehabilitation of the person. It's faith in the system. It's, making sure that everyone is, equally taken care of. All of the creditors are equally taken care of, and that there's investigation. So if we completely strip a Canadian of all of their assets, how are they going to rebuild? And how does that create faith in the system? It really doesn't, right?
Very interesting. So are you, okay, sorry, go ahead. Sorry for interrupting. So are you telling me that somebody may be able to keep, is it in all cases that they're able to keep their primary residence, or there are certain limits? Because if somebody's living, let's say, in $1 million Toronto home, it's through no fault of their own, because we've had a buoyant real estate market. Maybe they bought that house when it was worth $250,000, and in the meantime,
that's right.
So would they potentially be told, hey, no, you gotta sell the house, we're not going to accept this? Is this like how do you see the question? Is there a certain limit to, let's say, the value of the property that they might be allowed to keep if it's their principal residence?
There are certain things that are exempt, that, certain assets that do not have to be surrendered in a consumer proposal or bankruptcy. And though the act is national, it's Canada-wide, the amounts are different by province. But let me just tell you which items are exempt, and then you're welcome to visit Bromwich+Smith.com, by your province, and you can have a look to see how much, because I know your podcast goes out all across Canada, right?
That's right, yeah.
So the things that are exempt that none of your creditors can touch are anything registered. So an RRSP, our ESP, RIFs, LIRA. So any type of a registered investment, some equity in your principal residence, and it depends on the province how much equity in your home. Some equity in your vehicle, which again differs by province to province. Tools of the trade, household items, personal effects, and then life insurance policies that have a named beneficiary who is an immediate family member. All of these things are protected from your creditor. And I'm so glad you brought this up, Letitia, because again, we talked about in the very, very beginning how people have a lot of stigma and shame about talking about these things. And quite often, we try and, Canadians, North Americans, we're very individualistic. We don't necessarily want to reach out for help. We want to handle things on our own.
Oh, yeah.
The first place we'll go to is we're going to start liquidating our assets, right? So we'll sell things in our house. We'll get rid of our RSPs. We'll sell the house. And I'm glad that you asked this question, because I want to say to Canadians, stop.
Right.
Don't liquidate anything. Have the conversation first, because some of these things are protected. We don't want Canadians stealing from their future self for past things or what's happening in the present. So your RRSP is meant for your retirement so that you can have a comfortable retirement. We don't want you to lose that, and no creditor can take that away from you. So have that conversation and know what your rights are.
That is so great. Thanks for sharing that. So that's really, really, and even the fact about, life insurance policies to an immediate family member, that's obviously my area of work. is there any limit on things like cash value inside a life insurance policy? I don't know if you can comment on that.
Those usually are not protected, but again, I'm going to say have that conversation with a debt relief specialist on your individual situation.
Fair enough. Interesting. Okay. And what about, I'm guessing non-registered investments, but I'm guessing like if somebody's already behind the eight ball, they're probably not, they probably don't have a ton of non-registered assets, because otherwise they wouldn't be reaching out to you.
Sometimes they do. Sometimes people do call us with a decent amount of a TFSA. Like a TFSA is a non-registered savings plan. So unfortunately, that is not exempt. And that's another, it's interesting you say that, because another myth out there is the only people that are insolvent are people maybe with a lower income. And we have worked with doctors, lawyers, oil and gas professionals. It really isn't about how much money you make. It really is about these external triggers and can you, handle your debt payments in the normal course of your day, whether you're making this much money or this much money. It's really about the debt situation and whether you're feeling overwhelmed by that debt.
Yeah, no, thanks for sharing that, Taz. And you know what, I in the course of my work, I have come across, high earning professionals that, unfortunately also had in my opinion, like a very high amount of debt. And I had to wonder, like, man, how is this even possible? But we all know, there's that cultural thing about keeping up with the Joneses. And we still do, to a great extent, live in a society where it's like, exactly that,
We're a consumer-based, credit-based society.
And a bigger house, and a nicer car, and keeping up with the Joneses. And it seems in some cases, at least, the higher somebody's income, the more their lifestyle also expands to reflect that. And I'm glad you said that. You know what? This is not just for people who may not have the income. You could have a very high income, but at the same time, also very high outflows and
right.
Which
also, again, no judgment there either. It's not always that people are living above their means. Like I said, sometimes you're managing, you're good, then you lose your job. So now you're the highest bread earner in the family. You're the lawyer, you're making all this money, and now you don't have your income. And 6 months later or a year later, you start going through a divorce. That's going to break just about anybody. And, we've had people that, have a $400,000 a year income. Through COVID, they're down to 100,000, let's say. And I know there's probably people listening going, I would die to make 100,000, but to go from 400 to 100,000 and then go through a divorce. I mean, that's huge. And so, it's important for us to maybe reserve that judgment. It's so easy for us to sort of say, oh yeah, you got yourself in over your head. And the other thing I want to say, we're so fortunate we live in Canada where we have an exit strategy. Really,
yes,
consumer-based, credit-based society without an exit strategy is so detrimental. So we're fortunate not all countries have an exit out of your credit. So we're very, very lucky that in Canada, as citizens, we have that right and we can exercise our right to exit from that debt.
Thank you. Yeah, Taz, I agree with you. And again, I'm really glad that you came on today's show to let people know about their options. And I guess my next logical question is, if somebody does feel that they want to have at least a conversation to learn about their options, I was going to ask about, what's the best way to reach out? And I know you yourself, you are someone who obviously promotes the company. You come as a webinar guest. But it would be one of your LITs, right? That would be speaking to a potential client, right?
So they would speak to one of so we have our company is LITs and debt relief specialists, DRS. So they would speak to one of our debt relief specialists, and all you got to do is just dial our one toll-free number, press 1 to speak to a real human being. You're going to actually speak to an empathetic person that's going to treat you with grace and respect. These are our values. Grace and respect, no judgment. You're just going to have a great conversation and figure out where you're at, what are your options, what are the consequences of each options, and so that you are empowered to make a really responsible decision that is best for your situation. You can also visit us at bromwich+smith.com. We have a lot of really great tools and blogs there. Of course, you can see all of our social media handles. Feel free to, you connected with us through our Instagram. So yes, I encourage that.
Yeah.
And another option, if you don't want to get on the phone, if you're, at work or something like that, or people are around you, you want to keep it a little more private, you can reach out to inquiries@bromwich+smith.com, and we can put all of this in the comment box later as well.
Perfect, Taz. So thank you for that. I think that pretty much concludes my questions and the main things that I wanted to touch on in this conversation. I'm going to see, Taz, if perhaps anybody put up any questions in the comment section. My guests know that while we're sharing the screen, I'm not able to also see the Facebook comments, but I'm going to lower that. I'm going to see if I can go into the comments, see if anybody has any questions.
Absolutely.
I don't see any questions, Taz, but you know what? You provide us with the contact info. If people want to reach out, if they have any questions, they're more than welcome to reach out to one of your specialists. And oh yeah, he sent me a Facebook invite. I'll add you. Thank you. So sweet.
Oh, I did. Yes, because I wanted to share that we were on live.
Oh my goodness, absolutely. Feel free to share the webinar. It's been my pleasure having you as a guest. Thank you so much for literally sharing your insights about these sensitive topics. I'm aware that for many people, this is one of those things that are like, oh, I don't want to talk about it. So you know what? Rather than I made it one step easier for them. Instead of even picking up the call, at least now they know a little bit more about what's involved. Yeah. And I think they can see how lovely you are. And I'm sure that some of your specialists are equally lovely and compassionate, as you said.
All of our people, our values are so important to us. We don't just hang them on a wall. We live our values. So anybody you speak to at Bromwich+Smith is going to treat you with grace, respect, dignity. And we will never refer you to someone that doesn't treat you that way either. So
absolutely. Thank you for that. Taz, thanks again. It's been an absolute pleasure. And I look forward to staying in touch and perhaps really, to continuing to support the people in our networks as best as we can. Have a great rest of the week. And thanks for everyone watching, and have a great rest of the week, all of you.
Thanks, Leticia.
Bye-bye. Take care.
Bye-bye.
I have to end the meeting.